joining us now to crunch the numbers is Harald Eggerstedt. He's banking credit strategist at RIA Capital Markets, and he is in our Edinburgh studios. Harald, great to see you as ever. What was your takeaway? What did you think of these numbers when you saw them?
Well, of course, it is quite positive that the loss has dropped quite significantly. We had a terrible year, 2008, with a loss of 24 billion. In the meantime, we have had these government support measures, including the asset protection scheme, which has come on stream. Of course, that has caused some other write-downs. So we see this now. Write-downs were almost 15 billion again, but because of the profitable activities in the trading on the trading side of the bank, investment banking side, this was well cushioned, so the result is not too bad. But the bank said it has impairment may have peaked, but that means they have not finished. So it's still a tough time ahead for this year. Indeed,
impairments may have peaked. That's one of the headlines that we had. But quite often when we're coming out of recession, we find that these company failures start to increase and these bad debts start to mount. So perhaps are they jumping the gun?
Yeah, well, as I say, because the economy was weaker than expected last year, particularly it didn't recover as strongly in the second half than we initially expected, and it may be having another weak year with the election coming and maybe budget cuts, another difficult environment for banks to operate in. So I don't think we are finished with impairments. The bank is quite exposed to commercial real estate, to some international markets as well that are still under pressure. And that's why I think it's going to be difficult for them to really make money even in 2010. So that means the government cannot easily expect the bank to buy back the stake the government holds, so the taxpayer will not see his money anytime soon. It'll probably be a couple of years until we see a much better result.
Is that what we're going to be waiting for, about 2 years before we start them paying back the equivalent of the TARP, if you like? And if so, what about the Conservatives' plans here to be actually reprivatising RBS and Lloyds?
Well, it seems to be appealing when you look at it, because it is, of course, not a very healthy situation. Government owning almost 80% of the bank, that creates difficulties for management orientation, for long-term thinking. But mass privatization isn't really going to help that much, because we do need a new outlook for the bank, and that involves some investment from other parties in the market, potentially institutionals and so on. That gives the bank more direction than a mass privatization. So I don't think it's really, it's not a fit-all solution to do that. I think it's better probably to wait some time and get private money into the bank and put it really on a firm, better track in the future.
Harald, how does RBS fit in your investment portfolio, and how do banks generally sit there?
Yeah, it did quite well, but we have seen that in all banks that have large investment banking arms, because it's been a market that have bounced back sharply last year, and the trading has been quite active on corporate bonds, on equities. So that has bolstered the results. But that is a bit of a one-off effect here after the credit crunch, so we can't expect this to be repeated at the same scale. And we have seen in the fourth quarter that the revenue for investment banking has already gone down again compared to quarter 3.